Welcome to Module 2. In this section, we're going to talk about market orders. A market order is an order to buy or sell immediately. All you would do in your MT4 platform is click buy or sell. To make that appear, you just right-click on the chart, click one-click trading, and then you conveniently have buy and sell. So for this example, I'm going to click buy. Keep in mind as well that depending on market conditions and spread, there may be a difference between the price you selected when you clicked buy or sell and the final price as executed on your trading platform. You can see here at the bottom that I've entered into a trade and I'm currently in this one trade. You can see I executed it on the Euro USD at a 0.01 lot size and I clicked on the buy button. So now I want to show you what a stop loss is and a take profit. These are both really important for you to be able to make a profit and to cut your losses as soon as possible. Now, if I click on buy, for example, I currently just got in the market right here, as you can see, and I'm hoping that the market will go up since I clicked on buy. If I clicked on sell, then I would hope that the market would come down to make a profit, right? So since I clicked on buy and I'm hoping that the market is going to go up to make a profit, that would mean that up here above this green line would be my take profit. A take profit is the point where if price reaches that line, it's going to automatically close out and take the profit. And a stop loss is the complete opposite. So since we hit buy, that would mean that if the market continued to drop, our trade would be negative, right? And so to prevent the trade from going too negative or from losing too much on one trade, you would place a stop loss. The stop loss, just like it sounds, is going to stop you from losing more. It's a line that once price reaches it, it's going to automatically close the trade as well. So to do that, all you have to do is come up to this line, the price that you just got into, click on it, and drag up. Now you can see over here on the left that it says TP or take profit. So that would mean that if I put this, let's say right here, once price or if price continues to climb up and hits this line, the trade will automatically close. And at that point, I would take my profit. Now you can see down here that we're currently in the trade and the trade is fluctuating as the market moves up and down. So then if I wanted to place my stop loss, I would simply click and drag, and my stop loss is going to be below the line since I clicked on buy, right? Because buy would mean I would make money up here, and sell would mean I would make money down here. So I would lose money if the market drops. So here's my stop loss. As you can see over here, it says SL or stop loss. And also if you hover over this line, you can see here it says the profit, negative $1.68, and the number of pips, which is actually points. So that would be 16.8 pips. Here above, you can see as well in the take profit, if the market goes up and hits this line, I'll make $2.09, and that would be 20.9 pips. So take profits and stop losses are so important, and you'll probably be using them on almost every single trade that you take. So make sure that you understand this section well, and if you need to go back and watch this section, I would suggest that as well. The last order I want to show you is what's called a trailing stop. And a trailing stop is a type of stop loss that moves as the market moves. This way, once your trade goes into profit, your stop loss can move all the way up to the break-even point, and as it goes into more profit, your stop loss can trail behind and continue to move with your trade as it goes into more profit. With your stop loss being above the break-even point, that would secure your profit. So to do that, you simply have to right-click, come down here to trailing stop, and then you can select the distance that the trailing stop is behind the current price at all times. Now, one thing to take into account is that the trailing stop does not widen if the market goes against you. So for example, let's say that this came up here and my trailing stop was falling behind it. If the market started to fall back down, my trailing stop wouldn't also fall down. My trailing stop would stay put as the market comes back down, and that's how eventually the trade would close. Here I want to show you a quick example of how the trailing stop works. So as you can see here, for example, you got into this buy trade, and we have a trailing stop on this trade. So as this moves up more and more, you're going to see the trailing stop get triggered here in just a sec. There it is on the blue line. So you can see the trailing stop is moving up with the market as the market keeps moving up. So if the market moves down, boom, just like that. I'm gonna go ahead and pause that right here. So you can see the market shot back down here and our trailing stop didn't move down with it, right? Our trailing stop just stayed in the same place. So when the market moved back down, it hit our trailing stop and closed the trade. So this helped us to capitalize, as you can see here on this entire movement here, all the way up here. Whereas if you had just a take profit line right here, you would have been stopped out here, and you would have had a lot more profit had you had this trailing stop instead. If the trailing stop didn't make much sense to you, you'll just have to try it out and see how it works, but it's really quite simple once you get the hang of it. If take profit and stop loss don't make sense to you, I would just go in the market on a demo account, hit the buy button, and drag these two lines and just see what happens, and you'll start to catch on as well. Of course, you can also go back and rewatch this section, and hopefully that would help you as well. So let's talk about what limit entry orders are. A limit entry is an order placed to either buy below the market or sell above the market at a certain price. For example, let's say that we're in the market right here, and you want to place a sell order, but not right now, rather up here when it gets to the line. So instead of sitting in front of your computer all day and waiting for the market to come up to this line to then press the sell button on your MT4 platform to go short or put in a sell order, you can simply put in what's called a sell limit. So automatically when price gets up to this point, it will initiate a sell order. It's pretty cool, huh? The same goes for a buy limit. Let's say that the market's currently here, and you think that once the market goes down to here, it's going to turn around and go back up. Instead of sitting in front of your computer and waiting for the market to get to this line, you simply set a buy limit at this line, and once the market comes down and hits that point, it'll automatically place a buy order, and that way, once the market moves back up, you can make that profit. So you can see you would use this type of order if you believe that once price hits your buy or your sell limit order, the market is going to reverse. The second type of order is called a stop entry order. A stop entry order is an order placed to buy above the market or sell below the market at a certain price. So for example, let's say that the market's currently right here, and once it gets down to this line, then you want to place a sell order because you think it's going to continue to go down. Then you would place a sell stop at this point, and automatically once the market got down to this point, it would place a sell order and you'd be on your way to making a profit. Same goes for a buy stop. Let's say that the market was right here currently, and you don't want to buy yet unless it continues to move this way. Then at about this point, you would hit buy because you've confirmed, yes, it is going that way. Then you could place a buy stop order right here, and automatically once the market reaches this point, it's going to place a buy order, and you're going to be on your way to making profits if the market moves in that direction. So as you can see, you would place a buy stop or a sell stop if you believe that the market is going to continue to go in the same direction or with the trend once it hits a certain price. And you would use a buy limit or a sell limit if you believe it's going to reverse directions once it gets to a certain price. So we're back in the MT4, and I'm going to show you how you can do this. First, let's close out of this trade so we aren't in any open trades. Now, let's say that once the market got up to this point right here, around here, that I want to place a sell order because I think the market's going to come up, bounce off of right here, and then continue down in this kind of trend that it's trending down right now. All you do is you right click, you go up to sell limit, and you click that, and there you have it. From here, if you want, you can hold the line and you can move it wherever you want. If you think, no, I want it up here a little higher, you can do that. And there you go. Once price gets up to this line here, it's going to automatically place a sell order. And then if the market continues to come down this way, that's how you would make a profit. For a buy limit, you just simply have to right click below the market, right? Because you wouldn't do a buy limit above the market. And then you just click buy limit, and there you go. So if the market drops to here, then it will buy at this point, and then we're hoping it's going to bounce off and move up in this direction. Now, let's say that you think the market is going to come up to this point, but instead of it going back down, you think once it hits this point, it's going to continue to go up. Then all you have to do is right click as well, go up to here to where it says trading, and click on buy stop. And there you go. So a buy stop, like we just learned, means that if the market continues to come up and hits this line, it's automatically going to open a buy position, and we're hoping for the market to continue to go up. The complete opposite would be a sell stop. Down here below the market, you simply go to trading, right click, go to trading, and then click on sell stop. And there you go. So now if the market moves back down, so let's say we think the trend is going to come down, 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 and then continue to go down. Once it gets to this point, then you would place this sell stop here, and once the price comes all the way down to this line, it'll automatically open a sell position, and you do that with the hope that the market will continue to go down for you to make a profit. So in conclusion, the basic Forex order types are usually all that most traders ever need. Here's a cheat sheet that can help you out with these types of orders. And remember, do not trade with real money until you have an extremely high comfort level with the trading platform you're using and its entry order system.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.